The news is unsettling. Bank bailouts, high unemployment rates, homes in foreclosure, skyrocketing credit card debt. Recent events in the nation's economy have many consumers thinking and rethinking their investment options. But whether you're a seasoned investor or someone who is in the early years of building a portfolio, financial experts agree it's always a good practice to periodically evaluate your investments.
It's a great idea for individuals to go back and review their holdings because investor circumstances and markets change. So what investors should do is go back, take a look at the risk in their portfolios, and make sure that the risk is commensurate with their expected return.
Depending on an investor's tolerance for risk, there are many avenues to building wealth. Investing in the bond market, specifically municipal bonds, is one option that more and more consumers are looking into.
In essence, when an individual purchases a municipal bond, they're lending money to a state or local government. And in return, that municipality agrees to pay a specified interest rate and return the client's principal back at a specified maturity date.
There are more than 50,000 issuers in the municipal market with a dollar value of more than $2.5 trillion. Whether saving for college, a new home, or a comfortable retirement, municipal bonds can help investors achieve their goals.
In particular, municipal bonds are attractive to wealthier individuals, those in the higher tax brackets, because the interest is exempt from federal taxes and in some circumstances could be exempt from state taxes as well. Not only that, municipal bonds also appeal to individuals because of their perceived safety and security. And let's also not forget that when you include high-quality investments such as municipal bonds in your portfolio, what you really are doing is you're diversifying the portfolio, and it's the high-quality bonds such as municipals that perform very well during those periods when your riskier asset classes are performing quite poorly, such as equities.
There are two types of issues in the municipal bond market: general obligation bonds, or GOs, and revenue bonds. GOs are issued for specific purposes, such as parks, schools, or libraries. Interest is secured from the taxing power, such as property taxes. Revenue bonds are used to build a bridge or tunnel and secure principal and interest from user fees. With over 26 years of municipal portfolio management experience, Robert Wass founded RSW Investments in 2005. RSW Investments specializes in the professional management of separate account municipal bond portfolios for individuals and corporate investors.
By having the ability to shop the entire broker-dealer community, we could find the best values in the marketplace at the best prices. There's something called wholesale prices and retail prices. As an institutional investor or investment advisor, we have access to buy bonds at wholesale prices compared to an individual who's paying full retail, and it's a huge difference between the two set of prices.
The firm's goal is to create a portfolio that maximizes after-tax total rate of return while managing risk.
We're investing in bonds that predominantly mature between 10 and 15 years. That's for our flagship market duration product. And the reason why we do that is we invest just outside the comfort zone of individual investors because they only go out to 10 years predominantly. So by investing in 10 or 15 years, we capitalize or capture most of the yield that the market has to offer, but without investing in a 30-year bond.
In addition, the RSW team takes pride in its ability to offer superior performance coupled with personalized service.
RSW Investments was founded to provide the unique products and superior service of a boutique, certainly not that of a factory. So as such, we've really developed a very strong reputation for our accessibility, responsiveness, and professionalism. And also, we are very willing to engage in one-on-one conference calls, client meetings, and we always try to be in the marketplace first, providing a commentary with any news that seems to be important with respect to investor anxieties.
Though there are risks associated with all types of investing, there are ways to manage and minimize those risks. Experts say it begins with research.
At RSW Investments, we do all of our own research. Yes, we pay attention to the credit ratings of the major credit rating agencies, but we do all of our own research. And one of the reasons is we're trying to identify those left field events or that event risk that the rating agencies could be missing. So we try to think outside the box in our analysis.
As the economic recession lingers, some analysts predict that defaults on municipal bonds are a likely casualty. But experts say defaulting on a financial commitment is not an easy process.
There's other inherent strengths in the municipal market, such as the fact that a municipality must be declared unable to pay its principal and interest, not just be unwilling to pay. In addition, although not thought about in this context, municipals or municipalities are really monopolies. So unlike a corporation, they have the ability to cut their expenditures without impaling their ability to produce a revenue. Lastly, and perhaps equally as important, is municipalities can only issue bonds for the most part if they want to raise money to fund their operations in the municipal bond market. A corporation can raise money by issuing bonds, preferred stock, common stock. A municipality can issue bonds in the municipal bond market or the municipal bond market. And if that blows up, the municipal bond market. So they really don't want to cut off the lifeblood of their operations and be left without being able to fund their operations.
Experts agree when it comes to investing and building wealth, it's important to develop a plan, get professional advice, and do your research. For more information, log on to rswinvestments.com or call 908-608-9600.